Ladies and gentlemen, welcome back. This is Christopher Aaron. This is the iGold Advisor channel. We have an alert for gold to achieve $9,000 within the next 12 to 18 months. I'm going to show you what that signal is here. I am not joking about this. This is not clickbait. The actual evidence shows that this is a likely probability for gold coming up. It is January 13th, 2026. I hope you are well. Let's get into it. I just want to let you know I'm going to be speaking live in person at the Vancouver Resource Investment Conference. Monday, January 26th, coming up in just 2 weeks, 1:40 p.m. in the afternoon. It is going to be a more detailed version of what you are seeing here today with additional information. So make sure to come out. If you're anywhere in Canada or anywhere in the Northwest area, the conference itself is free. You can get tickets online. Come out, watch the presentation, come and say hi. I look forward to meeting you. Let's get into this update. So here is the information. Now, what are we looking at here in this chart? This is all data-based analysis. Not projections, not pie-in-the-sky figures. What are we talking about here? It is gold versus the U.S. stock market, going back for the last 25 years, okay? Gold versus the Dow Jones Industrial Average. Now look right here. Look how gold is just on the verge of breaking out above this beautiful 12-year cup consolidation. Do you see this? This kind of swooping cup-shaped pattern here. This is one of the most beautiful bottoming patterns that I have ever seen in the capital markets. And what this is telling us, when gold breaks this level here, 0.095, when gold breaks this level, the next significant resistance for the gold versus the stock market ratio is going to be all the way up here back at the 2011 peaks. Right up here, 0.175. Now, from 0.093 to 0.175 is nearly a 90% gain in gold versus the stock market just to get back to where it was in 2011. If you're watching this and you're saying, Christopher, I think you're crazy. You're talking about, gold is already $4,500, and now you're talking about another 90% gain from there. Listen, I am not crazy because this level, 90% higher from here, just gets us back to where gold was in 2011. Do you see where my mouse is right here, where I'm making this circle? Look at this point right back here in 2011. That's the level that gold was valued at relative to the stock market back in 2011. Where we are today, even though gold has quadrupled in the last 10 years, from 1,000 to above 4,000, it is still only worth half of the level that it was worth versus the stock market going back to 2011. And I participated in this bull market from 2007 right down here up to here 2011, and that is when I made my first small fortune. So there are a lot of investors here who have gotten a little bit, let's say, not believing that gold could ever rise to a level that high. What I'm showing you here is that for gold to nearly double again, all that does is get us back to levels that were seen in 2011. This is not pie in the sky. This is not wishful thinking. This is data-based evidence that you can see plainly right in front of your eyes, right here on the chart with me. So remember this. If gold is going to rise 90% versus the Dow, you might say, well, that's only a one-time thing. I want to let you know here that the trades that we have been doing over the last 3 years, look at all the different trades that we've been doing. We have 7 different options trades that we've done over the last 3 years. The average of those trades is up over 90%. So if you're saying, well, I don't only want one chance to make 90%. I want multiple chances. You've got to join us in Precious Metals Intelligence Plus because we're doing this several times per year. We're doing this kind of gain several times per year, okay? But I think this is coming for the gold price itself versus the stock market. Now, the stock market is currently trading at 49,500 for the Dow, and gold is 4,600. So watch this. I actually think what's going to happen over the course of the next 12 to 18 months is that the Dow itself is going to keep rising, but just by a little bit, by 7%. You know, a lot of people ask me, Christopher, do you think there's going to be a stock market crash, or do you see evidence for a recession? And I'm telling them, no. You know, I'm bullish on precious metals primarily, but I do not see a crash setting up in the stock market anytime soon. I think the Dow is going to continue rising over the next 1 to 2 years. Now, if the Dow continues to rise, even just by a little bit, by 7%, and we multiply that because we know gold is going to outpace the Dow by 90%, when we multiply 90% by another 7% above the baseline level, what we arrive at is a target for gold of $9,350. This is how the math works. From the current level, multiplied by 90, multiplied by another 7%, gets $9,350. And that just gets us back to the relative levels that were seen in 2011. No guessing needed here. No imagining something that's never happened before. Just getting back to the levels from 2011. So that is what I am positioned for now. I suggest that you make your final preparations now because this is on the verge of blowing. It is on the verge of blowing higher in favor of gold, and the next logical level is to get back to the 2011 levels that we are projecting to over 9,000 for gold at today's Dow prices. So, if you would like to follow along with the exact trades that we are making, I showed you the evidence of our trades right here, 90% gain on our trades. Remember, we also do long-term investing as well in gold and silver mining companies. We are cracking those out of the park. It is all systems go right now. The service for you is called Precious Metals Intelligence Plus. Why is it called Plus? Because we cover not only gold and silver, but also the stock market. You saw how those can be related. We also cover the currency markets, the rest of the commodities markets, platinum, palladium, copper, oil. We also cover Bitcoin with the exact buy and sell signals that we are using right here to make all those trades that you just saw the evidence for, and all of our long-term investments. Flash updates go right to your inbox when we make a buy or sell decision. If you're a higher net worth investor, you have to understand the power of these private placements. In the private placements, that's where we get the most leverage because we get free warrants with every single investment that we are making. The last private placement that we just did 1 week ago has already tripled. We have turned $10,000 into $30,000 in 1 week with this private placement. So if you are not doing this, if you're not taking advantage of these opportunities now, this is your last call because gold is about to break out versus the stock market. And once that happens, we are not going to have these opportunities anymore to make these types of profits. I'm letting you know right now. If you'd like to sit down with myself, Christopher Aaron, and discuss your situation from a researched and independent perspective, you can book a consultation right on our website. Just go to the consultations tab, click the button. You'll be able to see my available schedule. We sit down and I tell you exactly what I would do if I was in your situation. But remember, this comes from someone who does not sell the precious metals. This comes from someone who is not taking any fees, any kickbacks, anything whatsoever from any of the companies that we discuss, any of the bullion dealerships, any of the advertising companies. I am 100% independent and dedicated to assisting individuals across this sector. Why? Because we're changing our lives right now. We are setting ourselves up. I have dozens of clients who are going to never have to work a day again in their lives after this cycle is over. That's how powerful this move is that is setting up right now. I want you to be one of those individuals, okay? So get involved one way or another, because remember, the stock market versus gold, that ratio is breaking out in front of our eyes right now in favor of gold. And just to get back to the 2011 peak that we saw in black and white on paper implies nearly a doubling from here in the price of gold. That's the level that was set in 2011. I participated in 2011. I know how this market behaves when gold gets that high. It's going to be very, very, very good. Make sure you're taking advantage of it and not missing out.